Hello, everyone. Thank you very much for being on time. I hope you're well. Welcome to this afternoon. If you could first of all, please go to your menu and either in the chat box or in the Q&A section, if you can just tell me that you can hear me, just so that I know that I'm not speaking to myself, that would be fabulous. So you should have a chat section and you should have a Q&A section. Either one of them, click on it, just pop a note in there, thumbs up, something like that. That'd be much appreciated. Steve, Shad, Dan, thank you very much. That is terrific. Steve, you win fastest finger first. Brilliant. Thank you very much. Thank you, everybody. Excellent. All right then. So let's crack on. So this webinar is all about making money from property, and what we're looking at specifically is how to make the easiest way to make £20,000 from property. But we're also going to take into consideration a couple of other factors. We're going to look at the speed of making property. We're going to look at the complexity, the sort of background knowledge. We're going to look at everything surrounding the decision making in order to work out how you can raise 20 grand. But before we get into the content, I just want to tell you how to ask questions. So if you go to your menu, you've got the opportunity to raise a hand to ask a question. Now we don't share um, the microphone in webinars. What you need to do is you need to write out your question in the Q&A section. And I know that you've got access to the Q&A section because most of you have replied to me in the Q&A section. But if you put your question in there, I have to answer it before I can move on to the next question. So it means that nobody's question is forgotten. So if you've got a question, please go to the Q&A section and leave your question in there and I will answer it. So the first thing that I want to do is I want to ask you a question. And this is, I'm going to launch it now on the screen. So you should be able to see that on the screen now. Why is cash flow so important to you? So what we're looking at is the easiest way to make 20 grand out of property, but we're also going to look at the speed of making that money out of property. What is it that you need that money for? Why is cash flow so important? Is it because you want to start in property? Is it because you're already in property and you want to scale up? You want to do more property deals, and therefore, if you want to do more property deals, you need more money. Or is it that you want to build an investment portfolio, you're growing a retirement fund? What is the purpose of raising this money? It'd be really good to understand. So I'll give you a couple of minutes, well, not a couple of minutes. That's a lifetime on a webinar. I'll give you a little bit of time so that you can have a look at that and you can tell me what your answer is. So usually what happens on these polls is that one of them is absolutely flying, and people don't vote for some of the answers, but we've actually got votes for every single one of these answers. But the majority, 40% is the majority on this poll, is that you want to change your career and get into property. So for most of you, and this is good for me because it tells me the sort of stage of property that you're at. Most of you are just starting out in property. So I appreciate you taking the time to answer those questions. So making money from property, what is essentially the difficulty of making money from property? And there's a few different things that stop you from making money and stop people from having property as like their main business, the main source of funds in their life. First of all, a 6 month conveyancing time. And what I mean by that is if you buy a property, if you made an offer today on a property, you're probably not going to own that property until 6 months. So it's going to take you 6 months to go through that to find the property to own that property. Now, bear in mind, if you want to make money from property, you're probably going to need to buy it at the start and then sell it to somebody else. Especially if we're talking about lumps of money like £20,000. If you were talking about making a return on your investment, like from a buy to let, for example, you're not going to make 20 grand for a long period of time. In fact, I've got a slide that shows you how long it's going to take you to make money from a buy to let property. So you're looking at more like a flip, buy something that's in a really bad condition and do it up and when you sell it, you make that pot of money, you make that 20 grand. But if you've got a 6 month conveyancing average, to buy it so you can start the work is going to take you 6 months. And then to sell it to then have the money in your bank account is going to take a further 6 months. So you're talking about a year just doing paperwork. And we know that these averages are about right because we buy and sell property all the time. But that's how long it can take you to monetize that property, at least a year. Now, if you're looking at property to be the thing that you get into and the thing that pays your monthly bills, that's a long time. So 6 month conveyancing average can be a real pain. The other thing that you need to take into consideration is you get you as the developer, as the person that's taken all the risk, as the person that has put everything together, that's coordinated everything, that's dealt with all of the worst possible things that are going to happen on that development site. You get paid last. Everybody else gets paid before you get paid, and you basically take what's left, especially in these bigger deals that you're flipping or you're doing a commercial conversion. When you first start a property deal, now going on to number three, a risky return. When you first start a property deal, you have no guarantee whatsoever that you're going to make that money. So if everything goes wrong on that deal, it's going to come out of your profit. It's going to come out of the money that you're taking away. So the longer the deal is and the more zeros that it has associated with it, the more likely things are to go wrong. If you've got a quick and simple deal, then what's called a more vanilla deal, then it's more likely that it's going to go right. But they tend to be the ones that return less money. So you've got no guarantee whatsoever that you're going to make the money that you were predicting to make at the beginning of your project. With project risks as well, you need to be present because, what if your main contractor goes under, goes bust? Then you have to do what you can to keep that project going and to find a new contractor. Now, if you're doing this as a side project, that might be a really difficult thing for you to do. But you as the developer need to take responsibility in full for everything that you're building. And you're trusting others to achieve your goals as well. If you are doing this as a side project, if you're doing this to raise money for other things or to get into property because you're currently not in property, then you're trusting other people. You can't be with everybody all the time. And as you might have heard, there are negative stories about, builders, about contractors, about people in property, and whether they're really invested in helping you or whether they're just out for themselves. So these are the kind of problems that you see when you're trying to make money from property. What we're going to learn is we're going to learn the difference between some of the strategies and how quickly you can make money and how easy it is to make money from that property strategy. We're going to look at specific time frames of how long it's going to take you to make £20,000. We're going to talk about risks and we're going to talk about mitigating risks to make that £20,000 as reliable, as predictable as possible. We're also going to look at the skill set that you need to have because I think it's fair to say that, not everybody can do property. Not everybody can do any job in the world, and property is a job. So you need to take into consideration what your skill set is and how that fits within property. You don't have to be skilled in the same way to do all property. For example, somebody that sells property needs to be a skilled salesperson. Somebody that manages a letting agency needs to be very skilled and very organized and understand compliance within lettings. So the skill sets can be different in different roles in property, but what you need to do is be realistic with the skill set that you've got and apply that skill set to the corresponding job within property. And you're also going to need to look at what commitment's necessary because plenty of people have made money from property as a sideline, and that is absolutely achievable. But if you're thinking that you're going to achieve massive things that are just unrealistic because of the amount of time that you can put into it, you need to take a step back. You need to have a look at what is actually realistic and what you're uh, considering what you're putting into it, and you need to reassess your goals and what you're going to achieve. So my name's Chris. I'm the Growth and Partnerships Director here at Sourced. I've founded, scaled, and sold multiple businesses in different business sectors, so I'm very, very familiar, especially with startups and starting businesses from absolutely nothing. I've been involved in property deals for from £39,000 up to £150 million. I've executed all the different property strategies everything that we teach here at Sourced, all the different individual strategies, I've not only done myself, I've also done it with franchisees. And then my current position is to build a Source brand and to strengthen our package that we offer out to franchisees. So let's have a look at the strategies first of all, and let's have a look at how long it's going to take in order to make the amount of money that you need to make. So we'll start with buy to let. This slide's gone a little bit wrong in the development in putting it onto this screen, but we get the gist. This is buy to let, and in buy to let, you're going to buy a property and rent it out to somebody. It's that simple. They're the numbers that I've used for this slide. So the average property price in the UK currently is £261,897. And the average rental income is £1,223 per month. Now, that's all well and good, but obviously you don't make £1,223 per month because you've got to take the mortgage into consideration as well. Now, the average mortgage interest at the moment in the UK is 4.61%. So actually, if you took your mortgage out a year ago, it would have probably been higher than that. But right now, it's 4.61%. That makes the average mortgage repayment £101,105. So that means with an average deposit of 25%, which is 65 grand, your annual profit is £1,416 from that buy-to-let property. So therefore, how long is it going to take you to make £20,000? And that is 14.12 years. So if you wanted to make 20 grand and that was your absolute target that you wanted to make 20 grand on a normal buy-to-let property, and bear in mind you've invested 65 grand into this, it's going to take you 14 years to make 20 grand. So I think it's fair to say that this is not going to be the preferred approach for the majority of people. I've just got a couple of questions, so I'm just going to go to the Q&A section and have a look at them now. Shad, you've asked the question, would mortgage not be interest only, not repayment? Yeah, absolutely. That could be a way of reducing the mortgage. I think you get the point though, and the point is, if it's going to take you 14 years on a repayment mortgage, it's probably still going to take you, what, 10 years on an interest only mortgage, because the interest is still a significant amount of that payment. So yeah, get your point. One of the things that I don't want to do on these webinars is confuse people with too much information, too many numbers going on the screen at any one point. So I chose a repayment mortgage, but yeah, you've got a good point. How can you deal source in different places in the UK if investors are looking at certain areas? How can deal sourcers look for property all over if they know a few areas? Well, I don't think they should. So just to be perfectly honest with you, I don't think you should look in different areas. I think you should absolutely nail one area and build your investor list and build your local availability of properties in that one area. And then if that area is not big enough, start to scale up. But what I see from people that try to choose too many areas at the same time, especially at the beginning, is they just spread themselves too thin. They end up not achieving anything. So good question, but that's my answer. Okay, next strategy. So now we're looking at flips because we know that the rental income isn't going to generate enough money. It's going to take too long based on the rental income. So we're going to look at flips now. The average property value, again, 261, including that deposit of 65 and 62, sorry, percent of flips return between 10 and £75,000. So I've gone bang in the middle of that 10 to £75,000 and looked at the average return of £42,500. Now, £42,000 is obviously more than the £20,000. So working on the averages of a flip, you could achieve this from one property deal, achieve that £20,000 from that one property deal. Now, if you are going to achieve that, like we talked about at the very beginning when we were looking at the conveyancing times, you've got 6 months in to buy the property. you've got 6 months out to sell the property at the end, and then you've got the work in the middle. So let's say that the work in the middle is 4 months. Well, now you're going to take 16 months in total to earn that £42,000. Now that might all be well and good, but bear in mind you've also invested £65,000 into this, or you've put £62,000 down, 65, sorry, down as the deposit, and that money is tied up in that deal. So you don't have access to that money over, over the period of running that flip. So that's an option. We've got an option here where it's going to take 14 months in order to make the money, and you're going to make more actually working purely on the averages than you would uh, to hit the £20,000. Oops, just went one too far. Let's look at another way of making that money. Another strategy that people use when they're first coming into property is rent to rent. So the average rental income in the UK is £1,800 per month. The average HMO room price in the UK is £600 per month. So 6 rooms in a HMO will net £3,600. You need to take bills off that because as part of running a HMO, you need to pay for the bills because you include the bills in the price, which means that this deal would net about £1,100 per month. And this is assuming that you're running it yourself and you're not using a letting agent. So £1,100 per month in order to profit from running a rent-to-rent property like this. So therefore, if you wanted to use this as your way of raising funds, it's probably going to take you about 18 months from beginning to end in order to get this deal done. Because with a rent-to-rent property, if me and you were having a conversation about me renting a property from you, we could sign that deal by the end of the day. Now, it might take you a little bit longer because you might want to get solicitors involved. However, we could theoretically sign that deal by the end of the day, and I could be renting your house out and managing that house and making an income off that house literally by the end of the day. So it's going to take you 18 months to exercise a rent to rent option. And this is this is one of the strategies that I've used, that I've done myself. And so I know that that is absolutely achievable. And that profit margin of £1,000 per month is absolutely achievable on rent to rent. Now, that means it's going to take you 18 months. But the thing that you also need to take into consideration with the rent to rent is you don't have to have £65,000 in your pocket to get one rent to rent underway. The amount of money that you need to have in your pocket to exercise one rent to rent is probably between £5,000 and £10,000, depending on the quality of the property that you're going to be managing. So you also need a lot less money in your pocket, but you can make that £20,000 within 18 months, which is very competitive when it comes to flips. And this is something that I think a lot of people forget, because when they look at a property that they can purchase and they can buy that property, they can do it up and then they can sell it, they think that they're going to make that £40,000, £30,000, whatever the profit margin is. They're going to make that money relatively quickly. But actually, if you're doing a rent to rent, it's going to take you 18 months. If you're doing a flip, it's still going to take you about 14 months. And that's if you sell the deal straight away, if you have an offer that you accept straight away. There's no guarantee that that's going to happen. So it could easily take you 18 months as well. So even though you're making money off rental income, rent to rent is still a very, very strong strategy that you need to take into consideration when you're looking at building pots of money to help you invest in deals in the future. Again, I just got a couple of questions, so I'm going to have a look at that. So, what about capital gain in buy to let? Yep, you would absolutely take that into consideration, but that's only relative if it's present, right? Not every area in the UK has gone up in value in the last 10 years. I heard a stat the other day, and I can't remember where it was based, but basically the price of a flat over the last 10 years in a certain part of the UK had not increased at all. The average price of a flat in this part of the UK was exactly the same as it was 10 years ago. Now, none of the people that bought those flats 10 years ago would have predicted that that was going to happen. So, yeah, you do benefit from capital gain, but you can't rely on capital gain because that's completely out of your control. Uh, Dan, thanks for asking that question. Hi, everyone. Are we live or is this a recording? You are live, Dan. So if you've got a question, fire away. So let's have a look at the strategy comparison very quickly. So buy to let 1,416 per annum, which means it's going to take 14.12 years to get to £20,000. A flip, one project can get you 40 grand, 6 months in, 6 months out, 4 months to build. That means it's going to take you up for 20 months. That isn't right, is it? That's 16 months, 16 months in total, not 20 months. Then we've got rent to rent. You'll do that in 18 months, and that's £1,100 per month. But bear in mind, for a buy to let, you need 75 grand. For a flip, you need 75 grand. For a rent to rent, you're going to need about 10 grand. So rent to rent is a much better way if you do have that money in your pocket in order to make that money. However, the way that I would suggest that you do it isn't any of those three things. The way that I would suggest that you do it is through property sourcing. Property sourcing, if you don't know what that is, you go out there and you build your network of estate agents, letting agents, people that control properties, and you sell those properties to investors. You package those deals up. You find out what the investment opportunity is in those deals, and you package that and you sell that to an investor. And then you can even sell add-on services, like you can introduce them to your mortgage broker, you can introduce them to the solicitor, you can introduce them to the builder who's going to do the work. And from each of those people, each of those trades, you would also make a commission, an introducer's fee. The way that you value your services in order to facilitate somebody buying one of these deals is basically 2% of the purchase price. So we've already talked about the average price of homes in the UK being £260,000. So if you sold the average house in the UK, your sourcing fee would be £5,237. And then you'd make, let's say, 250 quid from a mortgage broker, 250 quid from somebody else. That means that you're selling additional services for another £500, so that therefore your total sourcing fee is £5,737. So really, you only need to sell 4 deals in order to make 20 grand. Now, in terms of how long it's going to take you to sell those deals, when you're deal sourcing, you wouldn't need to wait for completion. First of all, you're not buying the deal in the first place. But then secondly, you don't need to wait for completion before you get paid. You can get paid on exchange of contracts, which now brings your payment term much, much closer. So now you're wiping months off the amount of time that you need to wait in order to get paid. Just got a couple of questions again, so I'm going to jump on to that. You're welcome, Dan. How much do we charge that? I think I've just told you. Yeah, it's like you charge whatever. So the question was, how much do we charge for referrals? So you would charge what you can charge. So somebody would be happy to pay you 250 quid. Somebody would be happy to pay you 500 quid. Obviously, if they're happy to pay me 500 quid for that referral because the service that they're providing pays them better, then I'm going to charge them 500 quid. If somebody else charges me 250 quid because that's all they can afford, then I'm going to charge them 250 quid. It's all about negotiation. So this is Tim. Tim started with Sourced with absolutely no property experience whatsoever. And he watched, not only he came to our induction, he watched our deal sourcing training that we have online, but we also had another course that he came onto and he absolutely threw himself um, into learning about learning the blueprint and learning the process of how to make money out of property. Now, whenever we're doing a business plan with any of our new franchisees, we always say that they're not going to make money in the first couple of months. They're just going to sort of bed in. They're going to get themselves set up. They're going to put the first couple of months into education. They're going to skill themselves up, and then they're going to go and deliver, just to make sure that they have a realistic time frame as to how quickly they're going to be able to make money. But Tim threw himself at it in such a way that he actually sold his first 2 deals in the first 2 months. And then he continued to sell deals all the way through that first year. So in terms of making 20 grand, Tim would have achieved that within 6 months just by selling deals. And then he built up an investment pot because he didn't need all the money that he was making from the deal sourcing. And that allowed him to go into purchasing and building his own portfolio. We've got another Tim. This Tim, um, he wasn't able to come to his first induction because he was poorly. He had COVID at the time, so that's when he started around the time of COVID, and that stopped him from coming to the induction. What he did was he threw himself at the online training, learned about deal sourcing, and then started to exercise the strategy. And actually, before he came to his proper first induction, which was 2 months later, he'd sold deals as well. So the way that we teach people is we have face-to-face courses, we have live courses like this that are delivered online, but we also have video courses. So if anybody wants the information that they're craving for at any point, it's all there and accessible for them because we don't want to ever stop our franchisees from being able to monetize property. And then now looking at the other side of this is Shahid. And when it comes to scaling up a deal sourcing business, this guy has absolutely nailed it. So he started just like everybody else started. And he built his business to the point where he was securing 22, 38 big numbers of properties in any one time, and then selling those properties in huge scale. So he sold 22 serviced accommodation deals within 48 hours of passing that deal through to us and us putting it onto our website to generate investor leads for him. Now, those 22 serviced accommodation deals, they're probably going to be returning the same kind of sourcing fee as the average for a property sale. So it's probably going to be about £5,000, or it certainly was at the time that Shahid was doing this. So that's 22 times £5,000 that he'd have made from those service accommodation deals. That's a significant amount of money. So deal sourcing, yes, it's seen as a sort of entry level strategy because the barriers for entry are quite low. But actually, if you're good at it, this can be the strategy that you follow within property. Just got another question. Going to have a look. Is there a risk of someone stealing your deals when dealing with experienced people? How do we protect against this? Yeah, absolutely. There's a risk of that, and you need to make sure that you're covered with the right contracts when you're doing deal sourcing. So to become a deal sourcer, this is the stuff that you need. You need, first of all, to be registered with the right compliance agencies. So you're going to need to be registered with either the PRS or the TPO because you need to be registered with a redress scheme. You're going to need to find investors, and that is the way that I would do it if I was in your position. You find the investors first because you can have a conversation with an investor about property. And then when you've got the investors and you've secured those investors with a contract, you can then go and find the properties to suit those investors' requirements. But you only do that when you've had a very in-depth conversation about exactly what they're looking for and how you can help them. So then you go out and find the properties. And when an investor decides that they want to take that property on, you get them to fill out a reservation form and pay the reservation fee. The property is not theirs, is not exclusive to them until they've paid the reservation fee. And for me, the reservation fee is always the same as the sourcing fee. So they leave that sourcing fee, that deposit, that reservation fee, and then you go through the rest of your compliance process with them, which is a KYC check, which is know your customer. So you need to have, proof of ID, proof that they live where they say that they live. Then you need to do an AML check on them, and you need to do a proof of funds check. At that point, that deposit that they left will go into your client account because it's still their money because you haven't earned it yet because the property hasn't gone through exchange. It's still their money, but it sits in your client account, so you're not paying tax on it. Then your position is to get that property to exchange. So if you get that property to exchange, as soon as it goes through exchange, then you earn that fee, and you can take that money out of the client account and you can put it into your own account. Okay, so what is AML? I've just had so anti-money laundering is the check, and you can do that kind of check through places like Experian or similar, and it'll cost you something like 12 quid per check that you do. Got a question from Justin. Why don't investors source their own properties? Why do they need sources? Uh, that differs from one investor to the next. Uh, the majority of investors don't find their own properties because they don't have the time. They've got the money, they know they want to get into property, but they don't have the time to do it. Because to find the best deals, you do need to commit time into networking, getting to know people, and just the deal analysis itself can take a long time. I'm just clearing. Does AML checks need registration with HMRC or something? So you, as a deal sourcer, will need to be registered with HMRC as an estate agent. So you need to register with HMRC as an estate agent, and that's the AML part. And then you need to fulfill the AML checks. Yes, that's right. How do investors, how to find investors if you are not within the industry? Yeah, that's a good question. So uh, you tell me, what do you think? How do you find investors? You're going to go to networking events. First of all, the thing that the majority of people don't actually take into consideration is you know a lot of people already. And if you're not within the industry, they probably know you because of your job. You know, you're, I don't know, in recruitment, like let's say. So there's Dan, he's in recruitment. But if you go to those people and you say, actually, I'm in property now and I'm looking for, you know, properties to do up, or I'm looking for people to buy properties. I source properties for people to buy. Some of your existing network will probably be interested. And what will happen is if you tell your existing network, people will come from that network and say, actually, we haven't spoken for 10 years, but I'm into property as well. Let's go for a coffee and have a chat. So a lot of people forget about the existing people because the existing people in your network, they know you already. So you don't have to go through that credibility thing. And they should like you, which is why they've stayed in touch with you. So that's your opportunity. Look at your existing network and see who in there is interested in property or interested in buying property, because there will be conversations about property that you have with people that you would have considered would have been in property. But then after that, the way that we do it is we advertise the properties out onto our website to then bring in investors. We have a lot of investors registered on our website who are, you know, we started off with an investor list of zero. And it's just through consistency that we've now built that investor list to over 100,000 people. And now looking at the team, so what we do to help people that come on with us is we create a blueprint. And this is the blueprint for property sourcing. I mean, this doesn't explain a huge amount, but what it does is it breaks everything down step by step for what is necessary to start and register yourself as a property sourcer and then get a deal done. So as you can see, there's lots and lots of steps that you need to take. And that's one of the things that you need to take into consideration on property that you, from the outside looking in, people make it look fairly easy, but it's a difficult thing. It's a difficult thing to understand. It's a difficult thing to execute. So don't think that any part of this is going to be easy for you. What we do with our education piece is we have courses that last 4 weeks. And that course is on at the same day, at the same time for a 4 week period. And in between those weeks, we set homework because the courses that we do, it's not just sitting in a classroom and learning about something. What we do, it's all about making progress. So after week one, we'll then ask you to go out and implement week one to actually put it into practice. And then we come on week two and we discuss what we've done in that interim period. And then after week two, you'll then have different homework. And after week three, different homework. And it's all about making progress. Now, in terms of goal setting, because we've sort of picked £20,000 as a random figure that you're going to make here, which it's not, it might not be what you're looking for. You might be looking for £100,000. You might be looking for £1 million. Whatever you're doing, you need to set goals for it. So when you're goal setting, the first thing that you do is you define what you want. So is it 100 grand that you want? Define that. That's 100 grand. That's what I want. And then you work out how you're going to achieve it. So what are you going to do? How many deals are you going to find? How many investors are you going to speak to? Um, if you do it that way round, then you'll achieve higher and bigger and more aspirational goals faster than if you just think, well, I'll just sell one deal a month, for example. But when you've come up with that big goal that you want to achieve, and let's say that you want to achieve it in 12 months' time, you then break it down backwards. So you say, well, in 12 months, I want to achieve £100,000, let's say. So in 6 months, I need to be at this level in order to hit my 12-month goal. And then if you know that you need to be there in 6 months, in 3 months, you need to be at this point to then hit your 6 month goal, to hit your 12-month goal. And you keep breaking it down backwards until you understand on a week to week basis what you need to do in order to hit those targets. And then when you've broken that down and you understand how many properties you need to find, how many investors you need to speak to, how many deals you need to sell, how many viewings you need to go on, and you've broken down each part of that into its component parts, you can then start to write a business plan because now you know what is necessary for you to hit your big goal in 12 months' time. Now, one of the other things that we do at Sourced is we don't just talk about property sourcing, but what we do with our franchisees is we create a business plan to show their growth through property. Because for a lot of people, they might start out with property sourcing, but it's not what they want to do in the long run because they want to build their own portfolio. So we might say in years 1 and 2, you're going to do property sourcing because you need to build up that pot of investment funds. And then in in years 2 to 4, you then focus on flips because you've been sourcing flips for other people. So now it's really easy for you to find flips. But now instead of sourcing them onto other people, you're taking them on yourself. And then in years 4 to 5, now that you've got a significant amount of money behind you, you can go into the bigger projects that are more expensive to get into, like a commercial conversion. So here's some of our franchisees that have done exactly that process. So this is Phil. He focused on flips, 40 grand in profit from the first deal that he did with us. That was funded by us as well, by our in-house funder, Source Capital. This is Nigel. Nigel focuses on HMOs. Uh, he then rents those HMOs out to the NHS, so they're very low cost for him to run them once they're in his portfolio. Again, funded by Source Capital, and organised and project managed by Nigel. This is a residential conversion done by Jamie. So this is the first one, which was one house that he basically just did up because it was a grotty old bungalow. But then what Jamie did was the first project had one house, the second project had 7 houses in it, the third project had 24 houses in it. So as he's built the pot of money that he has available, he's gone onto bigger and bigger and bigger projects because that's what we try to do with our franchisees. It's all about growth. It's not just about the next deal that you can sell. So let's have a look. I've got another question for you. And here we go. So what do you understand as your preferred strategy moving forward? What is it in property that you're inspired by that you want to do? Is it deal sourcing? Is it rent to rent? Is it buy to let? Is it HMO flips, commercial conversions, new builds, title splits? What is it that you're inspired by that you want to do? I'll just leave this on for another 10 seconds or so. So get your votes in now. Okay, thanks very much. Appreciate it. So this is what we offer our franchisees. This is what our franchisees have accepted to get themselves ahead within property. If you were going to do this on your own, you'd probably need about £50,000 in the bank in order to do it full time and to cover your salary, cover your startup training, and have a bit of investment capital. You'd probably also need to spend about £5,000 per month, and that doesn't include your salary actually. But you need to buy property leads, you'll buy investor leads. You've got organization admin systems from CRMs, etc. You need to do some some marketing to get the leads in. You might have a consultant or somebody that's analyzing deals with you. You're going to have to pay for funding applications. You're going to have to pay for monthly training events to make sure that you know as much as you need to know as regulation and legislation changes. You're going to need networking and to pay for networking, and you're going to need contracts and finance and all that good stuff that makes that secures your position within property, and that can easily cost you £5,000 per month. Now, if you want training, you go to a trainer. If you want support, you might go to a trainer or you might go to a mentor. If you want lead generation, you're going to go to um, a lead generation company. If you want the app, sorry, if you want to sell deals, you're probably going to go to an estate agent and you're going to have to pay at least 1% for that estate agent to sell the deal for you. If you want funding, you're going to go to a lender and you're going to have a fairly low loan to value. If you want joint ventures, you're going to have to go to a JV partner and give away a lot of your equity. However, joint ventures, agreements in principle, funding, um, selling deals, property leads, investor leads, support and training is provided by us for our franchisees. So we've looked at everything across the board that somebody would need to be successful in property, and we've put it together and put it into a package that you can access. And this is the cost of that package. The fee, you've got two choices. The fee can be £10,000 or £5,000. You can then take it over 5 years or 10 years, and you'll have a fee, a monthly recurring fee of 255 if you take it over the 5 years, or 165, only 165 quid if you take it over 10 years. If you go for the lower purchase price, it'll be 355 over 5 years or 265 over 10 years. And VAT needs to be added to all of those figures on there. You also share some of your profit with us because we keep our costs as low as possible and put as much into the profit as we can so that we only make money when you make money. And that profit, that percentage share of your turnover, sorry, not profit, is 10% if you're trading a deal or 0.25% if you're purchasing a deal yourself. If you've got any questions about how we can help you move forward with making money out of property, then send an email to sam.clayton@source.co. Sam is in our onboarding team and he will be happy to get in touch with you and answer any questions that you have. But right now, let me just check my menu. I do have a question myself.